Let's take a look at some charts on Bitcoin from this week's article on Brave New Coin. So Bitcoin has been strong and remains strong. Trend-wise, on-chain metrics-wise, on-chain metrics are waning slightly. I'll go through that as price goes up, in that we're going up a little too fast for on-chain metrics to support the price historically. We're not in dangerously overbought territory, but we are basically vertical on that sort of indicator. So if we look at market caps first, obviously BTC rules the land. Today was a BTC market cap all-time high, not shown here. It's a little higher than 311 billion now, but it's just eating the world liquidity-wise when you look at all the other altcoins. That'll change, that'll shift. It has changed. It has shifted since a couple weeks ago. It was DeFi mania. Now it's Bitcoin quietly rotating to all-time highs. Really no one's talking about it in mainstream press that most Bitcoiners can really tell. Maybe Bloomberg article here and there, but nothing crazy. I'm not getting any calls from family members yet. So from that respect, this is all just starting. And you can see just the clear outperformance here compared to this mess, this gaggle, this scrum of altcoins below us here. XRP showing some strength, ETH obviously showing some strength. If you look at hash rate and difficulty, hash rate dropped a bunch, partially because the rainy season ended, partially because China's cracking down on crypto. There's some regional rotations with miners right now in and out of China. So all that's going to play a role in hash rate just because China is such a dominant factor in hash rate and ASICs. So we've started to recover. There is another ASIC coming next year, and I suspect there's going to be even more coming that are going to be announced just because price can support it. And if price continues to support development and sale of ASICs as well as the running of said ASICs, you're going to keep making shovels, right? If people are still digging for gold and it's profitable, people are going to make more and more efficient shovels. So hash rate looks good. You can see the big jump in block times when hash rate dropped. So it's just interesting how dynamic this system is and how sensitive it is when the chain is seeing heavy use, because we see hash rate go down, block times go up, and we get a massive spike in unconfirmed transactions to nearly 160,000. Really something we hadn't seen in a couple of years. So block space was at a premium for a little bit there. Not so much anymore. You can see everything self-corrected. Hash rate went up a little bit. Difficulty dropped significantly, and all's well. But that takes some time. And if you're not used to that and you don't know what's going on, you're thinking, oh, why is everything so expensive? Why is it so slow? That's just part of the machine. If we look at transaction counts and average transaction values, transaction counts have also taken a hit with that hash rate drop as well. Less blocks were being confirmed, so less transactions were being confirmed. Transaction counts have returned to the previous range, but still haven't increased really. It's just been all downhill pretty much since mid-2019. Not something I typically would consider bullish, and I don't now. It's a bit of a divergence from what's going on with price. Clearly there was a lot of activity 2016, 2017 leading into that all-time high, whereas now we're actually dropping in transaction counts. This could be because of increased efficiencies in how transactions are sent, batching, SegWit, off-chain transactions, that sort of thing. It's hard to know at what percentage those transactions account for and how efficient things are mathematically, because it's pretty clear even post 2018 to mid 2019, massive run up in transaction counts, which were a third party using the Bitcoin chain. So, it's hard to look at this in a vacuum without knowing what's going on. Here we had inefficiencies in transactions, then we got those efficiencies, and then we get this third party system using Bitcoin. Transactions got expensive enough where that third party is no longer a factor really, and now we're sort of probably back to an equilibrium where transactions look like they're decreasing on the decline, when in actuality this is just more organic activity versus some other third party using the chain. Transaction values have increased slightly, definitely multi-month highs, but nothing really actionable, bullish or bearish. Increasing you want everything increasing generally if you're bullish, so Sure, let's take it. Transaction fees also increased rather significantly as transaction times decreased, so it just got more expensive to send transactions. Mean block size just cruising at all-time highs above 1.2 megabytes. So this wasn't block ceiling limits, this was slow blockchain, which is why fees went way up. Fees have come down quite substantially back to the previous range. That was the highest fee period we've had since 2018, which is kind of nuts. Looking at NVT, inverse metric of economic utility, this is the one where it suggests if NVT is increasing, then market cap is kind of too expensive for on-chain activity. Active addresses just tapping 1 million on the 30-day average, but they're cruising above 1 million on the daily average. So this should start to increase slowly on the monthly average. Not exactly the craziness from 2018, 2017, but it's getting close for sure. If you look at MVRV, another inverse metric of economic utility indicator that looks at the amount of coins moving on-chain versus the market cap. This has also just gone vertical along with price. It's nowhere near 2018 levels of overbought. So if anything that says there's tons of upside, it just says, yeah, we are cruising right now as far as price is concerned. Anybody who's paying attention can feel that. Price has just been vertical over the past, since October 1st, really. I mean, we're plus 50% since October 1st. What more can you ask for? Q4 doing Q4 things. Historically, Q4 has been really good to Bitcoin. If we look at the UTXOs, unconfirmed transactions, unspent transaction outputs, rather, I like to look at this because at all-time high levels or local high levels, we get a lot of on-chain activity from new coins, basically. A lot of coins that haven't moved in a while start moving as people generally go to sell them on exchanges. We're seeing some uptick of that, but it's nowhere near 2017, 2018 again. If anything, exchange reserves are down and declining rapidly. So there's just nothing for sale right now. People are buying and moving it off exchanges or buying and just not moving it, which is the opposite of bearish. It is extremely bullish. There's just nothing for sale. And none of the hodlers aren't selling either. Another thing I like to look at is the sort of OTC retail volume. This is local Bitcoins plus Paxful, and I think one others from usefultulips.com. You can see that OTC volumes are actually declining in USD values. So I expect this to start popping up once again. You can see how crazy things got to a crescendo 2017, 2018. That's clearly the barometer to measure everything by. There's some arguments that retail's done with crypto and they're never coming back, but I think that's far from the case. I think what we're seeing now is institutional rotation into BTC, but I think retail will come, is here, will continue to be here, just in a smaller total amount compared to institutional, obviously. If you look at Google Trends again, comparing to 2017, 2018, the search history, the search volume for Bitcoin, the word Bitcoin on Google is nowhere near any top whatsoever previously. So if anything, again, this suggests plenty of room for upside. All right, let's get to some technicals. This is the 2-year moving average multiplier. The green line is the moving average, and the red line is 5 times that. This is actually an old chart, but the red line is now at 40K. So buy zone was here, sell zone at 40K plus historically. That's when we're talking about bubble top territory. And this will continue to increase just as it did through 2017, 2016, if price continues to increase. So it'll slowly creep up, but eventually it reaches a point where it's just too overbought and just is too expensive, too top heavy, and things come crumbling down. An indicator like this plus MVRV and UTXO heat map together is a really good checklist for how insanely overbought are we. We're not even close to being insanely overbought right now. Looking at Bitfinex long shorts, 50, 200 EMA, yearly pivots, and VPVR, along with volume and RSI. There's a slow grind upwards. We're at 17.7 today, 17.8 at the time of recording this video. There's a continuous bearish divergence here as price goes higher on less momentum. Volume is still, look at this compared to 2017. Bitfinex is a different exchange than it was in 2017, in that there's generally less activity there. So if anything, you want to use an index, but it's hard. It's just hard to look at volumes across the years with crypto because there hasn't been a mainstay. With volume, many exchanges use fake volume or embellished volume, so it's hard to even take any of that seriously throughout the years. So volume is just a really tough one to even take seriously. But this is obviously, this volume here is next to nothing. I mean, compared to any period in the past 2 years, volume is extremely low still. Resistance at yearly R2 around 18K. We're close to that today. I mean, all-time high. All-time high is right around the corner. So this looks like it wants to tap, but it is, man, it is overbought as all get out on low time frames here. The 200 EMA is below 12K. So it's going to be support at around 13.5. That's really where I think most people are comfortable getting mega margin along at that point. But it's hard to not look at this verticality. I mean, this is like 75-degree angle upwards here plus at this point. Just a complete rocket ship since October 1st. Complete rocket ship since the bullish TK cross on the cloud here. So you can see we get these periods of reconsolidation on this trend metric, and then it's decision-making time. And when we get this bullish TK recross above the cloud, the decision historically has strongly been bullish continuation. This one was not a disappointment. So right now it is, once again, extremely overbought and will mean revert at some point. You know, playing that is the hard part. Watching it happen over time, just as we did in 2019, just as we did even in April, May, price went way above the red line here, the Kijun, and eventually came back in February. It always comes back. The question when it comes back is, will it reconsolidate or will it just fall off the table? I certainly don't expect a mega bear move like we had in March, but I do expect a significant retrace soon, within the next month, definitely. Then lastly, looking at CME futures contracts, which have sort of forecasted increased volatility during the rollover periods. If you look at all these contract dates, the openings and the closings, there is typically increased volatility surrounding them. So the next date coming up is November 27th. It's just good to pay attention. Pay special attention to that during the week of November 27th, a few days before, because if you are in a position that doesn't have tight stops, or if you're not expecting just, out of left field move because you're not paying attention to that, it's good to be on high alert for those days. Something else I noticed, since December 16th, all of these contracts have closed higher than they've opened. And I think that sends a strong signal to the institutional people who are trading CME futures contracts alone. It says the trend is your friend and the trend is go long, and you'll be up significantly at the close for the most part of this contract. So overall, Bitcoin is humming on all cylinders. It's a bit hot for on-chain activity versus market cap, but as far as sentiment is concerned, in many different varieties, we are nowhere near 2017. There's one thing I really didn't talk about, but a lot of exchanges are just going down repeatedly. Binance said they were having issues. Deribit has unscheduled maintenance. GDEX Coinbase is down every few hours. So that is also a signal that lots of people are trading this. There's a lot of activity, a lot more activity than usual. So all of that together, extremely bullish, hard to deny. Watch November 27th, 10 days from now. Increased volatility. Be prepared for the mean reversion. Don't let it blindside you. It will happen. There will be some massive, scary wick. At this point, it could be a $5,000 candle to the downside that'll bounce and eventually make new all-time highs. But be careful out there.